We're taking a closer look at a subject that sits at the heart of Ghana's economic recovery. We're talking about the current investment climate and where to put your money. Where to put your money. Now, Ghana's economy has been through a period of some turbulence in the recent years, from inflationary pressures to debt restructuring and what have you. But we're beginning to see some changes, a shift gradually. And questions are emerging. People are asking that, is investor confidence returning? Which sectors are worth paying attention to? And most importantly, where should smart investors be putting their capital in this environment? So this morning, we'll unpack the opportunities, we'll look at the risks, also highlight the high potential sectors from agribusiness to real estate, fintech, renewable energy, and all of that. So whether you're an entrepreneur, you're a seasoned investor, or somebody simply curious about Ghana's economic direction, this conversation is for you. I'm joined in studio by two individuals, and they are going to help me have this conversation this morning. I have, of course, they say ladies first. So Miss Christabel Okante, she's a head of strategy and investor relations at InvestCorp Asset Management Limited. And she's in studio with Gideon Morrison. Gideon Morrison wants to be referred to as a financial advisor, so we'll do just that. Okay, so lady and gentlemen, you're welcome to the Business Breakfast on Z.
Thank you.
Thank you.
All
Thank
right,
you
great. Good to have the two of you. And I know InvestCorp recently celebrated their 10th anniversary.
We did.
How was it? Tell us about it.
Oh, it was an exciting time. We got to meet with our clients who've been with us from day one and even new ones, and to be able to celebrate that milestone. I mean, our goal is to help both individual, institutional, pension clients be able to achieve their investment goals. And so we're happy that over the last 10 years, in spite of all the turbulence in the market, we've still been able to survive, and we're able to celebrate that milestone. So it was a good time.
Wow, 10 years is a lot, actually. Yeah, I mean, to be able to, according to research, I think startups are able to just succeed, I think, for about 3 years. They don't succeed beyond 3 years in Ghana. So to be able to do 10 years, I mean, that's huge. And congratulations to you.
Thank you.
Yes, and happy anniversary. Gideon, Charlie, how are you doing?
I'm super. Just taking it a day at a time.
Great, and you are on leave, so you're enjoying.
Yeah, I mean, I was trying to rest till.
So my call came in. I pulled you here. So thanks so much for coming, right? Okay, so let's get into our conversation this morning. And I'll start with you, Christabel. Tell us, so how would you describe our investment climate now in this country today? How would you describe it? What does it look like, basically?
Okay, so I would use the word evolving, right? I'd say that the investment climate has come a long way. We've gone through several cycles. Like you mentioned, growth of a company, the market has also gone through cycles of growth. And so I say that today the market is evolving. Granted, in the last couple of years, there's been several things that have happened that have bothered investors. There's several things that have happened that have also encouraged investors, right? But I feel like we're at the turning point where the capital market is ready to take on new things, right? And so the market, that's why I use the word evolving, because there's so many new things on the horizon. And as an investor or as a regular Ghanaian, or if you're not even Ghanaian, you can ask the right questions and you will find an investment that suits your needs and your goals at any given time. So that's my broad view.
So what specific indicators are you looking at to say that we are evolving?
Yeah, I say we're evolving because in the last 2 years, we all know that the economy, there was a bit of a macro collapse, right? So we had all our indicators topsy-turvy, for want of a better word. But now we see things are regularizing. We see that inflation has been reducing consistently over the last year. That's one thing. We went through a very drastic cedi depreciation, and now we see that the cedi has stabilized quite a bit. There's been some appreciation, which is good for all of our pockets over here. Yes.
And just the last 3 or 4 days, I mean,
there's been some
there's
been some appreciation.
No, depreciation really.
Depreciation, yes. So there's been some depreciation.
But go ahead.
But yes, so those are some of the things. We see interest rates also have gone down drastically. If you remember, when we did post DDEP, we had the economics people will say we had an inverted yield curve, right? Which means that if you were investing for a longer period, you're actually getting a lower interest rate versus people who were investing shorter term, right? So we see that is correcting, so that the people who are the time value of money, that principle is being observed. People who are investing for longer periods of time are being compensated adequately for the investments that they've done. And we see that short-term interest rates have also come down drastically. Granted, there's still a lot of activity in that sector because people are still worried about the investment climate, but we still see that there's activity. And we see that government has been good with their fiscal endeavors, right? We see all those parties playing together. The monetary side is working, the fiscal side is working. And so we see interest rates gradually reducing and trending downwards. And so that's good. It's not good when people think about investment, they don't think about that, but all those things are linked. So reducing benchmark interest rates is a good thing. It's a good thing, yeah.
All right. But are we truly on a path of stability? Are we truly on a path of stability?
I want to believe that we are. I want to believe that we are. Everybody plays their part in the economy, in the society. So I personally believe that we are at path. Some of the things that people were looking for were to see these changes, right? Thank you. Were to see some of these changes happening. And once they're happening, it boosts confidence. And if confidence is boosted, then we see more activity on the market and things streamlining as we go along. So I want to personally believe that we are on the track. Yes.
Right. Okay. So let me bring Gideon into the conversation now. So Gideon, we've heard Christabel talk about all the things. I don't know if there's anything you want to add.
Well, I wouldn't really add more to what Christabel has said. Like she rightfully said, the market is evolving. And over this short period of time, we've seen some good dynamics happen. I mean, like she said, about 2-3 years ago, I mean, the conversation we'll be having today wouldn't have been said then because of the nature or the climate of investment in Ghana. But I mean, that notwithstanding, I mean, we've had some good stuff. Like CD appreciation. I mean, the currency appreciation. I mean, inflation has gone down relatively. I mean, we have some credit rating agencies that have rated the country, I mean, upward. So, I mean, that's sort of given some, spiking up investor confidence.
I was actually coming to ask you whether that is really translating to investor confidence. We're seeing inflation easing and all of these things that we mentioned. Is that really translating to investor confidence?
Well, yes. So, I mean, once there's an upward rating of a country's securities, I mean, it tells us that the government or the country is working efficiently to make sure that, I mean, once you put your money in any form of asset, I mean, you have this assurance that there's a possibility of you getting back returns on your income, if not even making more than it. So I think we're on a good path. Like she rightfully said, we are evolving. And I personally think we are heading towards the right direction. Even though, I mean, from time to time, we'll be seeing some movement here and there. I think, I mean, the market is correcting. And
Okay. I see Christabel nodding. Christabel, is there anything you want?
Oh, no. I mean, you were asking about is there evidence that there is investor confidence? And we believe so, because if you look at last year, if you look at even the fixed income market, there wasn't much trading going on. Even the equities market, right? There wasn't a lot of trading. But this year, we see that there's been some rebound. People are trading. You wouldn't catch anybody even buying a government a Euro bond sometime last year. But this year, that has changed. So we really believe that there's evidence to prove that the confidence is back. Yes.
I mean, even though interest rates are, relatively lower, I mean, you see people I mean, we have an oversubscription, consistent
sometimes.
oversubscription.
But for the past,
which is a good thing.
I think about the past 4 weeks or so, we've seen under subscription.
Well, I mean,
there's been that, and there's also government selective acceptance of bids, right, as well. Because if you're really trying to control your interest costs or your cost, you wouldn't take just any bid if it doesn't, fit what your goals are. And so we've seen government also exercising that part of their rights to accept certain bids and also reject certain bids. But
Okay. All right. So if you're just tuning in, this is Business Breakfast on Z101.9 FM. And this morning on our roundtable discussion, we are talking about the current investment climate in Ghana and where to put your money. So if you have some money there, just hold it. We'll tell you where to put it very soon. All right. But I would love to hear from you as well. You can send us a WhatsApp on 0544321019, 0544321019. You can as well call me on 0303956641, 0303956641. And then I give you the opportunity to ask your question or share your comments with us. You can drop a comment on our social media platforms. We are streaming live on Facebook at ZFMGH, on Facebook ZFMGH, and also on YouTube Z Multimedia at Z Multimedia. Please do want to drop a comment, and then I'll read them for you. All right. So let's continue our conversation. Let me come to you, Christabel. So what signals should investors be watching from government or the Bank of Ghana before committing their long-term capital?
Definitely, you would look at the macro indicators. Okay, you would also look at government strategy, but also, before even committing your capital, I always go down to the basics. What are you committing that capital for? What are your investment goals? Okay. What is your investment horizon? What is your risk tolerance? Because those are the basic questions that will determine the type of investment that you go in. Not just, yes, the market indicators are very, very important and critical. But as a person or as an institution, you need to assess those investment goals first. Okay, because somebody is going into the market just to say, for example, to maintain the value of their money. If you're just going to that, then you're probably looking at very low risk securities, right? So you'll be maybe at the treasury side with maybe just, a few basis points on that. Somebody is really looking for aggressive growth, okay? And if you're looking for aggressive growth, there's the market that you will double in. So some people who want long-term growth would maybe say, let me go into the equities market because there's potential for long-term growth there. So I don't just look at the broad economy, but I look at the investor in question, and to be able to understand what your goals are, then you are able to figure out where exactly you need to invest your money. I say investment is not one size fits all because everybody is different. Sure. And so once we know exactly what you want to do, then we can recommend investment for you. But generally, obviously, you look at the market indicators, market conditions to be able to determine, okay, is this a good time to go into this sector or not? There's times that, for example, if we look 2 years ago when interest rates were, the yields were very high and all that, people were now rather going into the alternative space. So there's opportunity there as well because alternative space operates almost inverse with the regular market. And so you saw people going into currency, people going into hedge funds, private equity, private credit. Those were the areas people were going because those parts were almost having an inverse relationship with the systemic risk that was going on. So really, it boils down to the investor in question. What is your goal? What are you trying to achieve?
Okay, Gideon wants to say something.
Well, I think Christabel has said most of what I wanted to say. Yes.
Right.
So, like she rightfully said, look at the macroeconomic indicators. I would say I think a lot of Ghanaians have the mindset or the conception about investment with the mindset of savings. So, there's this traditional thing that, I want to invest. And, they automatically expect that once they invest, their money should appreciate. Investment goes both ways. That's why we have the bullish market and the bearish market. So, I think in as much as you want to make a CD on your money, you should equally assess yourself, like she rightfully said. What is the objective of you investing? what are you looking at?
Right.
I mean, what's the duration? What is your goal? I mean, set practical targets for yourself. Then look for, a planner, a financial planner, or an expert who would guide you and, sort of curate, a portfolio of assets, which would, tailor fit your goals. So I think that should be everyone's priority instead of, asking what is the current securities, so that
people are really focused on interest rates, and so they don't, like he said, and just to support him, people just think about investments as being risk-free, but there's always risk in every investment, right? And even we as Ghanaians learned it the hard way that even our risk-free investment became risky.
That's true.
Yeah.
As investors, you need to understand that there's always some level of risk in any investment.
All right. So currently, which sectors are most attractive, or which sectors are the most maybe high potential ones, potential sectors that we can put our money into? Which ones would you mention?
Okay, so when we talk
why, okay. I appreciate the why as well.
Okay. So when we talk about the sectors, obviously people would want to think about the economy, and they would think the reference would be, say, GDP growth, and to look at how the economy is growing generally. And then we'll dive into the main buckets of the economy, where we have the agricultural sector, we have services, we have industry. That is on a very broad, high level side, right? It's good to know that, but not everybody can go directly into those sectors, right? I mean, agriculture has proven to be doing well in the last year. When we look at the GDP numbers, we saw the most growth in the agricultural sector. We also see that even based on agriculture, when we look at the market, we look at all the activity that's going, especially in terms of the SDG goals as well.
Yeah.
We see a lot of activity in agriculture. We see the government and other agencies having agricultural programs, and a lot of people should take advantage of that if you can, because some of them are free, so you should take advantage to learn something there. Then we'll come to services, which has been leading in terms of growth over the last years. And yes, services is a good space to go in. But I always say that in a developing economy, our focus has rather shifted to services, which should have been the last. The last part, that should grow. But we see that we have more activity in services. And so when you don't have a foundation of agriculture, you don't have a foundation of the industry, then that means when you have a lot of services, what's going to happen? We're importing almost everything. We don't make anything. But if we're doing those things in Ghana and those things were booming as well, then it would match with our services growth as well. So on a broad level, those are the areas. When we talk about agribusiness, there's a lot of things there. We see a lot of green projects also coming up. But I like to break it into the retail investor and the institutional investor.
Sure.
Because as a retail investor, your resources are limited, right? You may not be able to go get a farm and do some agribusiness directly. You can do it on a small scale, but maybe not with the returns that you're looking at, okay? The institutional investors also, some of them also have restrictions, right? They can't just go straight into those industries. But luckily, we have a very thriving capital market, right? So there are securities that are backed by some of these sectors that you can invest in. So as a retail investor who, let me just make it practical, say somebody who is earning, say, 3,000 cedis, 5,000 cedis a month. I mean, realistically, what can you do? When we think about your investment goals or savings culture, you would think to say, okay, there's a common 50-30-20 rule. So you're always saving investing or saving 20% of your income. Your 30% is, the needs that you need to have as needed, not really. And then you have 50% going to your daily expenses and everything. So if you are really saving 20% of that income, realistically, what can you do with that? And that's where the capital market comes in. There's lots of products on the market. Based on the regulation from our regulator, Securities and Exchange Commission, you can go into a collective investment scheme. There are so many collective investment schemes which are diversified into different asset classes that are available for a retail investor to invest in. So if you are looking for one that was based on commodities, you would find one. If you're looking for one that had fixed income equities, you would find that they are available on the market for you. We also see the influx of these retail apps that you can go online and to do certain investments, whether local or offshore. But all those things, when you're doing as a retail investor, your education is also limited. So that's why Gideon was saying that it's good to work with an investment advisor who can advise you on certain things, because there's a lot of information out there. But to sift through and to find the right information can sometimes be confusing for a retail investor. True. So we recommend that if you find an investment advisor, an asset management firm, they'd be able to guide you through setting those goals and finding the right investment for you. On the institutional side, they have lots of...
Before we go to the institutional side, I want us to mention some of the instruments that are available so that anybody that is listening to us and is interested would go in there, right? So if you can, let's talk about some of the specifics. So say, I don't know, but
okay. So if I think of specifics, like I mentioned, collective investment scheme. I work at Investcorp. We have 4 mutual funds. We have an equity mutual fund. We have a fixed income mutual fund. We have a money market mutual fund. These are designed for different types of investors.
Right.
So, for example, if you're an investor who wanted to be saving for, let's say, recurrent expenditure, you want to maintain the value of your money because you don't know when inflation would affect it, right? You could do a money market investment. Money market investments are very short-term investments. So you can look at they invest in treasury bills, fixed deposit, commercial papers, I think. Yes, there are those short-term securities that you can, those funds invest in. As an individual, you also have access to it, only that sometimes there are ticket sizes and you may not get that, how do I say, the funds have the economies of scale, they can bargain, right? You may not have that as an individual, but if you have enough money, if you have, the law says if you have over 100,000, you can have a managed portfolio. Right. So if you have over 100,000, you can go directly and a portfolio will be created for you. If you have below that, you can find a scheme that is doing that and you can go. There's also indexes. You can find an index and you can model your investments after it. So practically, there are collective investment schemes. I also see that there are apps. I don't want to advertise for people, but there are apps that are available for people.
For you to invest in.
So there are people who want to do offshore investments, investments in another country, say, for example, like the US market, because they have a bit more activity. There are apps that are available that you can just download them from from any of those stores, and you can load a wallet and you can be doing those investments. That's very practical. You can do that. Only that what you have to do is really monitor the market because things change very quickly on those markets. So you'll be smiling in the morning and the afternoon. You'll be very
so it comes back to finding somebody who is actually
in there, to assist you. But you can do that. You can start that culture yourself if you want to. You can do that. I mean, you can walk into a bank, and if you wanted to buy any type of fixed deposit, they'd be able to assist you with that. If you wanted to buy treasury securities, they'd be able to assist you with that. For the more complex securities, they have ticket sizes, so they are not very readily available to an individual. That's why we recommend that if there is a scheme that you find, read about it. They will have their prospectus on their website. Read about it, look at their fund fact sheets, look at the investments that they've made. You will see the assets. They've invested 8% here, 10% here. Another thing that I realized that people who join these funds, they don't attend meetings, right? But the funds have meetings. They have AGMs. Go to the AGM. Ask questions, because it's your money. It's not a passive investment. Ask questions about it so that you get informed. And then if you need to find an alternative, you find that alternative. But it's important that you actively manage your investment. So that's realistic. If you on the retail side, it's just easier to go through an organization to get certain things and to get the diversification that you want, because as an individual, you may not be able to diversify your portfolio. For example, in the 3,000 example I said, you are investing, if you are saving or investing even 500 CDs, realistically, how can you split 500 cedis into different
Mm-hmm.
securities and get a very competitive return. You won't be able to do that. That's why I say the collective investment schemes, the mutual funds, the unit trust, they are there. They have that diversification inbuilt. They are managed by professionals. They are regulated by the regulator, Securities and Exchange Commission, right? So there is active monitoring on those ones. Those assets are held in custody. So it's not sitting on the fund manager's books. They're held in custody. So if there's an issue, those assets will always be available. The fund manager is required to give you information. As a customer, you can ask, and your answers or your questions will be answered. So there are a lot of securities available for the retail investors.
Okay, let's talk about the. You want to add something?
Yes. So like Christopher rightfully said, I mean, I think you must know your, personality as an investor.
Okay.
So I may be an aggressive investor. Christopher may be a conservative.
Right.
So let me just give a practical example. Just 2 weeks ago, I had someone in church who was like, "Oh, Gideon, I want to invest some money, but I need it to like 5x in." In my mind, I was like, "Okay, but do you know what it takes to 5x your money?"
Right.
Because high risks come with high rewards.
That's true.
If you are willing to 5x your money in a couple of years, then you should equally be prepared if you lose all that on one investment. So, like you rightly said, we have collective investment schemes tailored for, the category of investor you are.
Okay.
We also have REITs, which are relatively new, which I would encourage.
What is that?
That's real estate investment trust.
Okay.
So, some people do not like the idea of, superficial investment, if for what of better word. They can't see it. They want to see that.
Yes. So it's investing in real estate.
In real estate. Okay.
Real estate. So but this is more,
so you can see that this is where your money is going.
Yes.
All of that.
So, just go to the, investment managers platform, their website. You'll see the various documents, the prospectus. Read through. If you don't understand, ask questions. You see, a lot of people don't ask questions. They just, no, ask questions.
Right.
So this month or this quarter, I saw that my portfolio appreciated. This quarter is depreciated. What happened? What's going on? Okay, why is my asset being valued at this way?
Okay.
Ask. There are more things to it than does meet the eye. So you have to just go to the financial experts.
Right.
Ask more questions. It's your money after all. At the end of the day, if you come home with losses, even though they might be indemnified by their professional individual, it all boils down to you. You come home with the losses. Okay. So ask questions. We have security for institutional. Now they have emerging markets. We have private equity, private debt, private credit. Crowdfunding. We have all those
commodity side.
Yes. So just ask questions. Okay. Be curious. Be inquisitive. And I think with the right guidance, you should sit pretty and make some good money.
Yeah. Right. Okay. So so you're about to talk about, Christabel, you're about to talk about the institutional.
Yes. So I was saying that with the institutional side, they have a bit more capital money to invest. And so for investments that have minimum ticket sizes, like you mentioned, REITs. Yes, REITs are the upcoming. We see the regulator now licensing a lot more REIT fund, right? So those are real estate investment trusts. So basically they are just acquiring real estate and then probably renting for rental income. And so that's what is distributed back to the investor at the end of a period, right? So you probably cannot buy a house, but the REIT can buy it and you can gain from the rental income or the sale of property. You can benefit from that.
So you give them your money to buy.
So the REIT pools money from investors. Right. Okay, so me, you, Gideon, right? They pool money from us and then acquire a property. So when they acquire the property, the guidelines from SEC say that a percentage of the property must have rentable must receive income from rent. Okay, so if it's a building and it's renting, it's an office, say it's a commercial building, it rents out the space, it receives rental income, it pays all its service providers. What is left will now be its profit, and that profit will be shared to the investors. Okay. And then after a period of time, it's also listed on the stock exchange, and so then you can trade in and out of positions if you bought into such an investment. But because it's real estate, 500 cedis, 1,000 cedis may not be able to buy in a significant share.
Right.
So they usually would have a minimum ticket size sometimes.
What is
every fund is different. I'm just giving you heads up that while some funds may be on the lower side, some may also be on a little bit of a higher side. So it's easier more for institutional investors because they have the capital to go into that.
Which one is the least you've seen?
Let me not see. Let me not see. I'll share with you later. You can share with your listeners. But yes, they are available. We spoke about the fact that when it's an institutional investor, you can customize a portfolio for them. So we can sit with you and say that 5% will go here, 10% will go here. Bear in mind that we have understood your goals, your investment goals. We have understood your liquidity needs. One of the things we didn't mention was liquidity needs earlier. Even for retail investors, it's very important because if you want to put money away for a college fund, which you will need in 20 years, it's different from if you want to put money away for your rent, which is due at the end of the year.
True.
Rent that is due at the end of the year, you won't put it in a fund that is investing for 20 years. Now, when you want your money is locked in. You will say your money has been stolen, but really you didn't understand the product that you invested in. So your liquidity needs are very important. For institutions, we ask that a lot because sometimes they're using it for projects. They have to pay certain monies out at certain periods. So we need to ask those questions. And these investments, because of the commitment that is involved, they go to what we call sophisticated investors because there's a lot that goes into it. For example, if you're buying into a private equity fund, you are buying into a fund that is investing in real sector. So real sector, it might be investing in SMEs, maybe in Ghana, maybe in Senegal, maybe in Cote d'Ivoire. And it's subject to country risk, it's subject to industry risk, it's subject to currency risk, it's subject to several risks. And so it is a more sophisticated or savvy investor who can understand and appreciate these volatilities. Also, with those investments, there's also a longer locking period. So you might invest for 5 years and not receive anything. You understand?
I see.
You are exposed to the company, so you need to be very patient to get your capital back, because if the investee companies do well, then you get your return, right? So those investments are there. So you have all these alternative investments, the private credit. Then we have external investments, like we said. You can invest on other markets, and those markets are more sophisticated. So I used the word evolving when we started for Ghana, and that's the direction that we're going towards. So if you went to the US market, there'll be index funds, there'll be ETFs, there'll be treasury securities, there'll be all these real estate, there'll be derivatives. The markets are so sophisticated that they have a lot of products that are available. So for institutional investors, if you are not barred by certain restrictions, regulatory restrictions, then you can access those markets through a fund manager who can purchase those securities for you. A lot of people, you ask where can they invest. A lot of people, when the currency was depreciating, were worried, and so they wanted to preserve their money in a different currency. So they were sort of hedging, right? So they wanted to go to other markets, and so if they didn't have any regulatory restrictions. If they didn't have those regulatory restrictions, then those products are also available for them. The good thing is that I say that every cloud has a silver lining, right? When we went through what we went through together, it created the opportunity for new things to come out, right? So in the past, nobody was talking about alternatives. We all wanted to do our fixed income and equities and move on, right? And that was it. But the good thing with going through such a systemic thing is that new things have birthed, right? So new products are available on the market. I'm sure if you go to the regulator right now, the kind of products that are coming out will be so exciting, right? Because it's now time to change what status quo of what people were investing in and bring on board new things to attract new people. And so now on the market, I say that in the next year, you expect to see a lot of beautiful things coming out. We see the regulator also taking a firm stance. They have a capital market master plan, which they're working at, right, to bring all these things that we want to see, the green bonds on the market. You know, people are now becoming, there's a new wave of impact investing right?
And all of that. I was actually coming to that, but since you're talking about it.
Yes, there's a new way of impact investing, ESG, all those things are coming up. And so we see that the regulator is also championing that. Even the government, we see they're doing a lot of things in terms of climate. And so there are new things that will come on the market, and we expect to see that, you know, going forward. The other things that will come. Just keep your ears to the market.
Even with fintech.
Even with fintech, yes. There are lots of, and the fintechs are some of the things that I'm saying, that you can just download an app and be able to even do some of these investments. Whereas before, you couldn't even have access to do those things. Yes, we see that's some new things that are coming. I don't want to see it. Some things that I'm privy to.
Christabel is just being all diplomatic.
She wants to stay on there.
No. I mean, I'm privy to some things that are coming, and so I'm excited about some of the products that you will see on the market soon.
So what we are saying is that even if you have money right now, you don't just jump on and say, I'm putting my money here.
No.
Okay, you need to look at your goals. You need to observe the markets, and so the middleman really will have to be an investment advisor. Is that how you call it?
Yes.
Okay, to be able to help. But you talked about the risks and challenges that we are beginning to see. What are some of the risks that people should look out for before they put their money anywhere at all in Ghana's current climate? And I don't know whether you would want to, Gideon, I don't know whether you would want to look at that. Or maybe, maybe we should start
in terms of the current climate, obviously,
interest rate,
but
currency risks.
Policy, even policy-wise, we have come from, in December, we moved into a new government regime. So new governments come with new policies. So there could be policy uncertainty. We saw that, certain things were changed. Earlier, we saw that even in terms of government policy, new things were introduced, right? So there's policy uncertainty that you have to think about. But even that, there's still a silver lining. We see the government coming up with a 24-hour economy, supposed to boost certain things in the economy, and all these things translate into real sector, translate into investment sector. And so, yes, you have to look at the uncertainty.
So which ones are investors currently facing? Is the policy thing, the financing costs?
I mean, certain things have changed. Right, I think I heard you talking to somebody from BOG earlier. I don't know if I was mistaken.
No, it was it's an in-house economic analyst.
Okay, so I heard him saying something. But you see reforms in certain areas. Banks have had to change certain things. We even saw that, for example, the Bank of Ghana did a lot in the monetary side. They did a lot of OMO to mop up certain things in the market. So in terms of policy, those things happen. There's always good or bad sides to it, but I don't think investors are facing anything too negative in terms of the policy reforms that have come out. But again, investments have volatility, so those waves will come. When something changes. You definitely have to be mindful about the indicators, like we've mentioned. If you are somebody who cannot take certain levels of risk, you stay in the safe markets. You don't go and double in certain, for example, equities, because equities have a lot of volatility, right? Depending on how the company is doing, your return might not be great, but some companies too are doing marvelous on the exchange, right? So that there's those possibilities. You need to look at the indicators, look at the fixed income market. How is it performing? How is trading activity? Look at it. Where are interest rates going? look at the equities market. How is it performing? Are there any new listings?
Right.
Another thing that we even saw which is good, was that we now saw a lot of companies now coming to the market to raise capital.
Yes.
We didn't see that last year. So, for example, we saw Casapreco
Yeah,
come
now
up and raise some money, and people invested. This year, we saw a commercial paper come up. MTN has been doing that wonderfully.
Yeah.
They've gone through some changes. They've announced some things that have affected people's confidence, but largely it's a good thing, right? So we see a lot in terms of the private companies as well coming and the activity on the market. So look at those things and really consider what kind of risk you can take, what kind of time you have.
I would even say that, I mean, with government policy, I mean, I think just last week or so, we saw the chief of staff say that, I mean, government, the children's curriculum, agriculture should be incorporated in.
Yes.
So, I mean, this sort of sets a good stage for investors to, I mean, take note of some of these sectors and, I mean, get ahead of the game. Also, in terms of currency risk, like rightfully said, we have some collective investment schemes who are already, I mean, investing, mobilizing funds here to invest in, I mean, foreign securities, which I think is a good thing. That's if you want to hedge against the currency. I mean, some people have this mindset that the Ghanaian cedi will never appreciate. So for such an investor, I mean, you can opt for that. As well as we only have, I mean, other attractive markets like impact investing. So right now, I mean, we have the green bonds, I mean, out there. We have, I mean, PEs. I mean, with PEs, GVCA. I mean,
what are those? PEs? What's PEs?
No, that's private equity.
Private equity. Oh, okay.
So
GVCA, Ghana Venture Capital Association. I mean, there's a whole association with these private funds. And I mean, it's based on each PE or, I mean, private equity fund has its objective. Some may be more, I mean, climate conscious. Others may be going towards education. So it's based on the sector. I mean, I think just look at yourself as an investor and what you are willing to take. I mean, for you to give a hit, you should be able to take a hit. So just, I mean, assess yourself and just plug into the right mind frame.
So, Christopher, you were talking about the policy uncertainty. Yes. How can business hedge against some of these things in these times?
Businesses.
Well, the one thing is stay informed. You need to stay informed on the things or the occurrences on the market. It's very critical to your move or your strategy as a business. If you see that the policy is that certain reliefs in certain industries, you can take advantage of that for your business as well. But just stay informed. You should try to also join certain associations so that a lot of time they collectively bargain for certain reliefs, and you can also take advantage of that. I also see that when we spoke about the impact investing that's going on, there's lots of organizations that are now doing a lot of capacity building for businesses, and especially the SME sector. So if you're an SME, you should be trying to take advantage of those things. I had somebody who spoke to me recently about wanting to raise capital as a small business, and the capital market is supposed to match. People want to raise capital and people are looking for capital, right? That's what investment is. So if you invest in something, you have given capital to something, right? Yes. And a lot of small businesses are not able to take advantage of certain schemes on the market because they don't want to know about it. And two, they're not ready for it, And we were talking about PE and everything, but it comes with a lot of work, even for the fund manager. Because imagine you've started your company, and imagine me, the investor, coming to tell you that don't do this, do this. As a typical Ghanaian, you have a very funny approach. Hey, why are you coming to give me instruction? But that's the benefit that businesses enjoy from these types of investments in their firms, because now you have subject experts giving you advice, whereas by yourself you couldn't even do it. But now you have people. There are so many businesses who have benefited from PE investments. You will never hear about it. We don't talk about it. But we on the investor side, or we on the investment side, we know. We can tell you businesses who have benefited from those types of investment. So as a business,
Yeah.
you want
I think it's a good point to also say that, I mean, a lot of Ghanaians should disassociate from the mindset of owning. I mean, because their business is their baby, they don't want to share, I mean, the ownership with others. Whereas you may not have the expertise to, I mean, steer the affairs of the company to a successful end. In other markets, I mean, I'm more willing to have a 10% of $100 million business than be, I mean, the 100% share owner of a 2 CD business. I mean, so Ghana should desist from that. That was just,
but that's a fair point. That's a very fair point. But just to describe, just to add to that, saying that, as a business, whether small or big, keep your ears to the ground so that you know when policy reforms are coming. And when they're coming, obviously you have to always have an alternative. I always say that when people go to business school, they are taught the basics, right? SWOT analysis, personal analysis, all those things. Those things allow you as a business to assess yourself. What are your strengths? What are your weaknesses? And what's more important is the opportunities and threats out there. Yeah. If you know the opportunities and threats out there, you'll be able to put in place strategies to take advantage of them as a business, regardless of your size.
All right. So we have just 10 minutes to go. This is Business Breakfast on Z. If you just tuned in this morning, we're talking about the current investment climate and exactly where to put your money. I would love to hear from you. Please send me a WhatsApp 0544321019, 0544321019, and then I'll read your messages for you. You can as well call me on 0303946 3956 641 0303956 641, and then I will give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please drop a comment and we'll read them for you. Okay, so let's, we started talking about the opportunities, but you didn't want to mention, Krista, what do you want to? Yeah. she didn't want to mention the opportunities. So, I mean, I think we mentioned the areas. So we'll talk about green financing and all of these, healthcare and all of that. I want to know what role can small and medium enterprises play in attracting investment interest in these times? Yes, and I want you to handle that one, Gideon.
So with SMEs trying to position themselves to take advantage of this, I mean, I think it's sector-wise. I would say sector-wise. Okay. I mean, if you are a company or an SME who is more focused in climate, I think, I mean, I would usually I will use the PEs because, I mean, so with PEs, I mean, we have, because of impact investing, right? We have a lot of people who are more focused. So let's say a solar panel company, I mean, or a greenhouse farming company. Right. I mean, you can just submit your plans to a PE firm with the appropriate documentation. I think, I mean, you can get some good money, even an expertise on top. That's the good thing with PEs. I mean, you have the money, you have expertise. I mean, some go as far as helping you scale up. Okay. I mean, so I think it's all boils down on which sector you are focused in. Right. Also with the fintechs, I mean, you can do certain things like get a license from the BOG. I mean, do your due diligence before you even step out into some of these markets. So I think it's a matter of where you want to concentrate your focus on rather than, I mean, just trying to scale up. Okay. Yes. I mean, I believe in being a master of one than a jack of all trades. So, I mean, yeah, that's my take.
Okay.
Yeah.
You want to add something to that, Christabel?
You said the key word you said was position yourself.
Position yourself, yeah.
And in positioning yourself, there are several things that you have to do as a business, right? Yes. Is your paperwork in order, right? Are your corporate governance practices in order? So, for example, you go to a company and it's one-man show. Right, he's the head, he's the finance manager, he's the lawyer, he's everything. Do you have corporate governance practices involved? Do you have, a business sustainability plan there? Those are the things that these investors look out for.
Even with
continuity, yes.
Yeah, continuity.
Right. Yes. I'm giving you money. You're not coming to ask me for 1,000 CDs. You're asking for a significant amount for certain things, certain projects. For example, you're going to do some capital expenditure, right? And for somebody to give you that amount of capital, you need to prove that, one, you have a track record of success, right? 2, there's potential. 3, the business can be scaled, because why am I giving money to a business that has plateaued and cannot give me any other returns in the future?
Yeah.
So as a business, as SME, you need to really position yourself. Are your books in order? Accounting is very important. If you need to have your books audited, it's not even if, you do need to have your books audited over the period of time to show that, are you using good record keeping? Do you have bank accounts? These are the things that investors will look at, because at the end of the day, giving you money, I'm taking a risk in your business, one, and I'm expecting to get a return on the money I've given to you.
Right.
We've moved on from the principle of going to just banks and credit institutions and taking loans and then security. Even they don't want any security or collateral, because what is king? Cash is king. They want money. So you need to be able to prove that you are able to pay back their money and then the interest or the additional that they're requiring. But keyword, position yourself, involves doing all these things.
I think all this can be categorized under like 5 things. That's I think I wrote some things down.
Okay.
That's like formalized operations.
Right.
That is record keeping. I mean, audit, corporate governance, all that. Articulate a strong, scalable business. Make sure, I mean, your business is functioning. It can be expanded.
Right.
Yes. I mean, you can also leverage on incubators. We have the impact hubs. Which ones? Stanbic incubators. I mean, all these are platforms you could, I mean, try to put your idea out there, get people to come on board, help you build up.
Right.
I mean, digital tools. Yes. So we have social media. We have, I mean, all those guys around. So I mean, make good use of
those
them,
things.
and you'll be fine.
Okay, permit me to take you back a bit. When we're talking about the sectors to focus on, you mentioned areas, things like REITs. Maybe there's somebody listening to us who says, I have some money with me now. How do I even get a fund manager? How do I get somebody to give my money to trade for me or to invest for me? If we can give those little informations, how do we get that?
Take it again.
So there's somebody listening to us right now who says, I have some money now.
Yeah.
You've advised that we should look for investment advisors and all of those things. So where do I find somebody? Or I want to go into REITs. What's the first step to take? Yeah, basically.
So I will start from this angle. I think you can go to the website of the regulator.
Okay.
I mean, they have on a section of their website, they have a number. They've listed the number of operators they have licensed. Okay. I mean, not all operators in the Ghanaian market are licensed to do what they are doing. We have some bad ones.
That's why you have to be very careful.
Yes, we have some bad guys around. So, I mean, just to be on the safer side, I think you should engage the website of the regulator more. I mean, ask questions. Like Christabel said, ask questions. I mean, you can call in. I'm sure the regulator has, I mean, platforms made available to, I mean, address.
If you can give us a website, if you know.
Okay, so I think it's www.sec.gov.gh.
Okay, sec.gov.gh.
Yes.
All right.
So once you go, I think there's market licensees. I mean, we have the list for fund managers, investment advisors, broker dealers, issuers. All these guys are there. And I mean, out of these ones, even with the quarterly newsletters, I mean, familiarize yourself with these documents. Right. And I think it goes down to reading, being curious, being inquisitive. Yes, and you'll be fine. Yeah.
All right. So I think we have to go now. Let me just take your final thoughts. Yeah. Then I'm going to ask you one big question before we go. Yes, but let me take your final thoughts. Then I ask you that question. So start with you, Christabel. Your final thoughts. Or final words. Really.
Well, I'd say that as somebody who represents an investment firm, investment advising, if you need help, you can call me.
Oh, yes.
All right.
Oh, yes.
You can
Very
reach
important.
out to me at InvestCorp. You can check us online if you want to do that. But final thoughts for, like I said, the market is evolving.
Okay.
And so you need to come along as it evolves. Don't wait and be passive until the wave has ridden and then I should have done this or that. So come along. Be very curious and very inquisitive. Read a lot. You know, there's a lot of information out there. Lots of these investment firms have newsletters that they share. Subscribe to one. If you can't understand, most of them are broken down into layman's terms so that you can understand. Because sometimes we say very technical things and it might go over your head, but a lot of things are broken down so that you can understand. As an investor, know your goals. What are your investment goals? Why are you investing? Do you want to invest for a long period? What's your horizon, short to long? What is your risk tolerance? People don't know that. Some people, if their money, one cedi even leaves it, they will die, But somebody is willing to take a risk and say that, even one cedi, I know that in 2 years, it will now become 50, so I can wait, So know what your appetite is, and then that will guide what you want to do. But above all, we are in this together, right? Understand that investments come with volatility. No matter the investment, there is no investment that doesn't have risk. Every investment has some level of risk embedded. It's just that you need to know what level of risk you are willing to take as an investor, whether it's an individual, whether it's an institution. You need to know all those things. Also look at liquidity. How often do I need money? People don't think about that. They'll go do an investment and they can't take their money out, so they'll be crying. But know the liquidity of the investment that you have.
All right.
You have bargained for and signed up for. And I think those are the key things. To look out for.
All right. Okay. Thank you very much, Christabel. Let me come to you, Gideon.
So, before I say that, let me just give... my friend has been bugging my phone.
Okay.
Yes, so shout out to Daniel Afari. Yes.
Daniel Afari.
Afari, yes.
Is it? Okay, I'm not too sure, but we'll talk about it after the show.
That is fine. So, I'll just add on to what Christabel said. I would say, think like a local, but act as a global. Yes.
That sounds like a Comrade Mo saying.
Oh, yeah. So, just know yourself as Gideon. Know what your risk appetite is, what you're willing to tolerate. Also find out, be inquisitive. Where can I invest? Knowing my personality as an investor, where can I invest my money in to make a good return on my money? Also, if you're a business owner, I would say, start small, start smart. Leverage on ecosystems. Don't go solo. Don't be 100% shareholder of, like I said, the 2 cities business. Yeah. Open yourself up to invest. Open yourself to be teachable.
Okay.
And in all things, I think God is very important. I like to incorporate God as well. So I think you need that guidance. Your voice alone
sounds like pastor.
You need that guidance as well. But
very important.
There's the systems made available. So
all right. Thank you so much. Thank you. So my last question to you, I said I was going to ask a last question, is that if you had some 10,000 Ghana cedis today, Gideon, where would you put it?
10,000 Ghana cedis. Yeah. Well, as an investor, I would go for... I'm a more balanced investor. Okay. So I'll go for some conservative securities as well. I'll open myself up to some, dangerous securities. Maybe, equities. Let me say, when I say dangerous, equities. I'm also open to the idea of buying some foreign funds to keep myself afloat. Yeah,
Okay, so you diversify.
Yes,
Let me... Christabel, same question.
10,000 cedis, like he said, I have an approach where I'd also divvy the money up. Okay, so because I want some regular income, I wouldn't put all into equities. I'll do something that is fixed income. So maybe I'll do 20% in treasury securities. I'll do another 10%, say, in other money market securities. If I go on the equities market, I do something. Maybe I'll do an MTN. It's a good dividend paying stock. I'll do an EGL maybe. Maybe those are also good stocks. Maybe I'll do some 20% there. Then I'll do a percentage in collective schemes because they're already diversified. So I'll pick one scheme that has foreign exposure. I'll pick one of those. We have the Investcorp Money Market Fund.
I was trying to stay away from
I'll pick one of those. Okay. There's another fund on the market. I could also pick that also has... foreign ETFs.
Yes.
In Ghana, we have one primary ETF, which is a gold ETF. The new gold is doing well. I think it shares around 400 cedis or so. So you have those available.
I would recommend ETFs any day.
Okay. So, all right. All right, gentleman and lady, thank you so much for your time. Really, really grateful that you came this morning. Okay. All right, so that's how we wrap up today on a Business Breakfast on Z101.9 FM. We've explored Ghana's investment climate this morning.